Hi, my name is John Rebello, and this is the Bullion Vault. How are you doing, Willem?
Well, and yourself.
Good, thank you. So we are on episode 35, and if we look from when we last our last episode, gold broke the 3,400 line and went up to 37, and then subsequently sitting now at around 3,620 and a little bit of change between that. Your thoughts?
Yeah, it's actually very interesting. We were sitting, it seems like yesterday, when we were talking about 3,500 as this magical figure. Um, and we were hinting at, oh, it could hit 3,600, it could hit 3,700 even. And it's absolutely blasted past 3,600, all the way up to 3,675, around about there, I think was the high it hit. And of course, it's retracted a little bit. Obviously, when it hits these highs, there's a bit of profit taking, and then it just sort of finds that level again. But it's been sitting over 3,600, 3,630, round about there for 3 or 4 days now. And it's the 3,700 we were talking about as this big magical figure seems to be a lot closer now than it was a week ago.
Well, what's interesting, I read an article where they're talking about $8,000 an ounce by the end of the decade. And considering we are in 2025 and the latter part, that's not too far away. And with the current growth and the growth that we've had in this year alone on gold, that seems highly likely. In fact, that might even be short of the real projection.
Yeah, I mean, let's face it, the world is in a very precarious state right now, to say the least. Politically, financially, there's wars, there's, just so much uncertainty about America's situation. I mean, we're talking about the president of the USA who wants to make deals with countries or impose tariffs on them. Then he makes a deal with a country, and the country sends their workers there to go and build a factory in the US, which is what they want, and then they get arrested and deported. So uncertainty is the big thing here, and I think that's one of the main driving factors behind all of this. The second one is, of course, the job statistics that came in, which is not good. Let's just leave that there. And then the third thing is the expected rate cut from the Fed in the US. And, with all of the things with the job statistics now coming in, not that great, it's expected that there will likely be, I think it's 25 basis points cut to it. I saw somewhere that they said there's about an 88% chance of that happening, and there's about, I think it was small number, something like a 12% chance of a 50% cut. But we do know that Donald Trump has been pushing hard for an interest rate cut. He's been strong arming the Fed, let's be honest, and we need to see what's going to happen there.
Yeah, it's interesting. And I think from our last episode where it was quite a heavy episode where we spoke about economy and the seriousness of where the American economy is. And it's still being the biggest economy in the world when, that old adage, when the US gets a cold or the US sneezes, the rest of the world gets a cold. And it's still very much that. I mean, we spoke about it where China is gaining momentum and at some point will surpass the US as the biggest economy, and probably in the next couple of years that will happen. And then of course the wage on the dollar being the global currency, that's also changing. There's shifting away, and we've gone through all of that also. So I think gold, and we've seen it through a number of different things, is showing its resilience, its growth, the fact that it's been reclassified as a tier one asset with a tier one asset with Basel 3, is very clear that even from an institutional investment side, from a banking side, from an central bank perspective, that gold is now starting to hold a far significant meaning within the modern global economy.
Definitely. And I mean, we talk a lot about gold. We've seen some massive growth on silver and platinum as well this year. That seems to have sort of hit the brakes lately. I mean, it's still at a good level, both of them. We talking about silver sitting around about $41, um, platinum sort of hovering around $1,390,400. So there's been significant growth. They've slowed down a little bit, but there's no stopping gold. And as we usually say, silver is slow to respond, but then outperforms gold. So it'll be interesting to see what happens over the next few weeks with silver as well.
Yeah, and again, we've always spoken about this, is if you look at both platinum and silver, and as you've highlighted, is that their movement's been very lateral. Little blips up, little blips down, and silver stayed around that high $40 mark, and platinum stayed at the high $1,380 odd dollar mark. Again, that's also starting to build that momentum. You know, I always look at the stock markets or the markets as, you know, when you get stocks or equities that are running laterally, it's almost a building up of momentum, and it's almost like that tensioning of that spring. And the fact, you know, we saw silver, and we've spoken about it many times, whereas previously silver would shoot up to these highs and would lose probably in dollars $5 to $8 and return to a low level. Here it's shooting up and it's maintaining and dropping a few dollars here or there, or not even dollars, cents. And that speaks to where the world is. Same with platinum. It's had an unbelievable run up until now this year and has been exceptionally strong. I think it's almost more than a third of its growth this year has, you know, where its value is now, has come from 2025 so far.
It has. I mean, it's. I think it was something like 40, almost 40% roundabout there that platinum has grown this year, and I also think we're starting to see a little bit of the actual value of the inherent value in those metals for something like industrial applications. You know, silver. We've talked about it a whole lot in photovoltaic cells, in EV production. All those things require silver, platinum as well. And I think we're starting to see some of that starting to trickle through now, where the actual value of silver and platinum is being pinned more to industrial demand than it is to investment demand.
And you say that, I mean, I've definitely seen an uptake from an industrial platinum buying perspective within the markets. Again, in the PGMs, the platinum group metals, South Africa is the biggest producer of platinum, and Russia is the biggest producer of palladium. Of course, we produce all of the different PGMs, but in different percentages. And of course, I think it's about 24% is in platinum that we produce globally. And that again speaks to what I've seen in the markets now, is there's a definite uptake in buying, especially from industrial buyers. So big industrial buyers through Hong Kong, big industrial buyers into Europe and even into the US. And that's very, very clear. And again, you speak about tariffs, and what's interesting is gold has been ring fenced as a critical commodity, which they don't want to add tariffs to.
Yeah, well, on the other hand, there's tariffs being imposed on certain weights and sizes of gold. So it's, you know, we don't know what they do. I don't know if they know what they're doing, but yeah, but you're talking about industrial buying of platinum, and it's actually quite an interesting thing that is going on at the moment. If we looked at gold, we actually see retail sales of gold and silver going down at the moment. You know, just looking at this one article by goldsilver.com, old Maloney.
Yes.
You know, he states there that global allocation to gold has dropped to just 0.5%, which is below the 2% historical average. Now, on the flip side of that, we're actually seeing institutions starting to buy gold more aggressively. I mean, China has mandated insurers to allocate 1% of assets to physical gold. India's pension funds are drafting rules to allow gold investments. Indonesia is restricting gold exports to preserve domestic reserves. And Hong Kong investors have tripled gold holdings, according to HSBC. So, you know, we talk about the Kindleberger-Minsky model a lot, you know, and as we say, the first phase is the stealth phase. That's, you know, the guys who bought
The
Bitcoin.
wise
The
investor.
guys who bought Bitcoin at 0.01 cent for a Bitcoin, you know, and thought it was funny, and let's just
Or bought gold under $1,000.
yeah, exactly what I'm getting to. And now what we're actually seeing, the second phase of that model is the it's the
Institutional.
institutional phase.
Yeah.
What do they call it? I'm trying to think of the actual name for it now. It's the awareness phase.
Yes, correct.
And that is the phase where the institutional investors start taking an interest. And what are we seeing? We're seeing institutions heavily, aggressively moving into gold right now.
And what's interesting is if we take it back to the Kindleberg and Minsky model, and what's important is after the institutional phase, this awareness phase, we go into the general public phase, which you can see. I mean, in major publications around the world, they're talking about gold, they're talking about silver. The platinum's definitely getting back on the radar internationally, especially with hydrogen and the awareness of platinum as a base metal for that. The harvesting of hydrogen. So again, once we go into that phase, a lot of these prices technically should go parabolic. In other words, we'll have that massive uptake. And again, that speaks to the projections I said earlier, that can we see gold go to $8,000 by the end of the decade? Based on where we are now, based on what we're seeing, it's not unlikely.
No, it definitely isn't. I mean, if we just take a look at where it is now and it hasn't hit that mania phase yet, we're going to be looking at $3,700 that we're talking about as the new magic number now, and we're going to laugh. I think it's going to go way beyond that. I think we're probably going to see higher than that before the end of the year. As you know, December always has a bit of a boost in the gold price. So I definitely think we can still see some massive, massive gains. And, let's not chuck silver out yet, because as we said, it's sitting at around about $40 an ounce right now. We know that that is low. That is very, very low. The gold silver ratio is massive at the moment, and it has to close at some point. If we're looking at what gold's doing right now, and I've said this before as well, it's not going to be because gold gets cheaper. Silver is going to catch up.
And again, I mean, if we look at the pricing at $40 an ounce, silver in relation to gold, in relation to the silver gold ratio, is still great value. It is still considered to be a very good buy.
It is definitely, and I mean, just in general, even outside of that, for an investor who can't afford to put forward that, at the moment, what's it, 63,000 rands for a spot price for an ounce of gold, somewhere around there. I mean, it's absolutely ludicrous. There's very few people who can just take that out of their pocket and say, here, which makes silver an absolute beautiful metal to get into actually starting to stack your bullion.
Yeah, ounce accumulations. You would compare it if you had to take a direct translation, it would be accumulating grams of gold versus accumulating ounces of silver. And if you look at a gram of gold, you're looking at about over 2,000 Rand a gram. In dollars, you're looking at about $116 a gram. And in relation to that, silver is a $1.32 per gram. And if we look at silver in rands, it's around 23 Rand a gram. So same thing, I said, gold, 2,000 Rand a gram, silver, 23 Rand a gram on spot. So it definitely is affordable. It also shows you that accumulating ounces of silver makes sense because of its price point.
Definitely. And then if we further look at that article by Maloney, he talks about the paper gold time bomb. Now, paper gold obviously is when you buy gold, but not actual physical gold.
Well, this is and this is what we also need to state, and I'm happy you brought this up, is a lot of the times where people buy your equities or paper-backed investments of gold. This is and I want you to go into this now is this is the problem, and this is why we've always said that it is important that you need to hold a certain portion of physical gold within your portfolio for this exact reason.
Definitely. So, yeah, basically what he says here is that 1 ounce of physical gold supports 100 ounces of paper claims. Now, you can just imagine that, I'll actually read what he says here. The entire gold market is hallucinating that there is 100 times more gold out there than really exists.
Yep.
So what that means is the price is a lot lower than it really should be because there's this misconception of how much gold there actually is. And then he carries on saying that, if a small percentage of paper gold holders demand physical delivery, Jim Rickards estimates prices could hit $25,000 an ounce.
And again, this is where, and to contextualize that, that's fractional ownership. So you got certain companies that, or in financial institutions, offering you fractional ownership of an ounce of gold, of a sovereign coin like the Kruger Rand. And then suddenly you're paying into that. And then when there's a request for delivery, they've oversold that 1 ounce, probably, as you say, 100 times over. And that's where anyone that owns physical will benefit because the prices will increase at the same time.
And and then just to make you think a little bit more, he continues, this may explain why Trump's planned Fort Knox audit was mysteriously cancelled.
That's interesting, yes.
I mean, just not trying to throw a conspiracy out there, but it's very interesting to think about. And it's actually scary to think about that you could be paying that, obviously there's advantages to buying the paper gold,
Well, it's easy in, easy out. You don't have the costs of storage. There's a premium for physical and so on. Yes.
etc., 100%. And but you know, there's regulation, but as they said, 1 ounce of physical gold can support 100 ounces of paper claims. Now, we've always said, get the physical gold, hold it in your hand, have it as yours, and I'll stick to that.
Absolutely, and I think that actually lays exactly down to what we've been saying all along. Is it is important that if you are especially investing into some of the ETFs available or paper derivatives, is make sure you do your homework. And I mean, I've seen some of the very big ones backed by some of the biggest financial institutions in the world. And my question was, so if I wanted a delivery and I get that blank stare, like, what do you mean delivery? I
Yeah,
say, but I paid for the gold. I'd like it to have it delivered. And of course they know that 99% of the people wouldn't bother to ask for that. But what you're essentially doing is you are buying it. You are buying the physical. You're just allowed to go in and out of it. And the expectation from the provider is you will never ask for the supply of the physical.
I think, yeah, and I think that's what a lot of companies actually bank on as well. Even if you buy physical gold, they'll store it for you, they'll put it in their vault, and you know, I'm not saying that they do it, but I'm sure that there is a chance that there are some oversold. That they don't actually have the backing to provide that to you. And I'm sure that that happens all over the world. Is people that don't actually have that gold delivered to them, is it really there? That's the big question. We're looking at Fort Knox, and now they're asking, is it really there? And so that let's get back to the central banks that we were talking about. So, we've been talking a lot about China buying gold, and it's been, I think, 9 straight months now that China's central bank has been adding to their reserves. And this article that we've got here, it's actually very interesting because this was in July.
Yes.
And the interesting thing is that China isn't even in the top three.
Yeah, and this article is from the World Gold Council. So, as far as the data, it is reliable. They are consistent with the material that they do release.
Definitely. And the top three is countries that you would never expect. In first place, we have Poland, believe it or not. Very interesting. And they're sitting at 66, 67 tons of gold that they've procured this year. Next up is Azerbaijan, which is quite interesting. And then they're followed by
Kazakhstan,
Kazakhstan.
yeah.
China's only coming in at fourth there, and it's significantly lower than the likes of Poland. So it goes to show it's not only centralized to the east; it's all over the world. countries are adding to their gold reserves. And it's very interesting because I don't even see the United States on this
No,
graph.
they aren't. And what's interesting is I see Zimbabwe are even amongst those countries. So they are increasing their reserves by in buying in foreign gold, which is interesting considering they are a gold producer themselves.
We actually seeing a lot of African countries. We're seeing Egypt on there. We're seeing
Ghana.
Ghana.
Yeah.
So yeah, it's interesting that Africa, Europe, and the East obviously are all increasing their gold holdings, their central bank gold holdings.
Yeah, we're going to touch on that where we're going to actually talk about the different countries of and their holdings and or continents or regions. But I think before we go on to that, I just wanted to discuss housing in comparison to gold.
So yeah, that's another very interesting statistics. We've said time and again that gold doesn't really go up in value as much as fiat currencies lose value. Or, it's but looking at this now, we've got a little article here which you sent to me, which was very interesting, and it's about housing and the price of gold, a house in gold. So 1975, the average US home costs $39,300, and gold averaged $160 an ounce. So it was 245 ounces of gold to buy a house.
That's insane.
Uh, Now looking at it, we're looking at where is this now?
Well, if you look at today, so we can take this from September of 2025 right now. The average medium size or median US home price is $420,000. The price of gold right now is around 3,400. We can say it's around 3,500 because it's above that right now as an average. And right now that equals 122 ounces of gold to typically buy one home.
Yeah, and I mean that is 50% cheaper in gold terms. So, I think my theory goes out the window of gold holding its value steady over thousands of years. It is actually increasing. And there we can see, and I mean, this is in the space of 50 odd years.
But again, I think what also speaks to this is inflation. So we talk about what a house would have cost you in the 70s, what groceries would have cost you in the 70s, into the 80s, 90s, and so on. I mean, we've done those things where you see as far as consumer inflation, and you look at what groceries would cost. It would be three trolleys in the 80s, and then two in the 90s, and one in the 2000s. And into where we now, it's shopping bags that the same value has been completely eroded. We see that with cars. What you would have bought a car for now, you'd be lucky to buy a tire for a current car at that price, what you would have paid in the 70s or 80s.
Yeah, I mean, it's inflation. It happens. There's no stopping it. Everything is getting more expensive. Overall, across the world, if we look at it in a different way, the value of fiat currencies is going down.
That's what I think is really highlighted here, is that gold has actually maintained its value over this period of time. It's inflation and actual purchasing power that is actually decreased.
Yeah, and I mean, if we look at over the last 50 years, and of course, we're talking about the US here because that's where this study was done, nominal house prices rose 975%. Now, I mean, that is frightening. However, gold rose 2072%.
Yeah.
So it just shows you the actual growth, the actual power that gold has.
Yeah, and that also speaks to that devaluation of currency. So where gold has consistently shown over the last 70 years that it's outperformed all currencies hands down in growth, where they've gone downward, gold has gone upward, and this speaks to that straight away.
Yeah, I mean, okay, we have to give the caveat here that gold to housing ratio peaked in the 2000 and has fallen since, but still, it still just illustrates the actual power of holding physical bullion.
Yeah. I think also you got to bear in mind that we've gone into a world where pricing of homes, you know, our parents would have got engaged and got married and when were able to go and buy a decent house. And on that house, it would have in South Africa a swimming pool, in other countries a fair sized garden. And you go and look at that same property, same values, same size, and same size of actual under roof. And you go and compare what you'd buy that for today. And there are a lot of people entering the housing market that can't afford it. So you've got a lot of children staying on longer with their parents until they're at a later age where they can then go on and buy.
Yeah, I mean, you're talking about when our parents bought their homes. I think when my parents bought their home, okay, this was years and years and years and decades ago, but it was something absolutely ludicrous, like 30,000 Rand that they paid for it. And
Exactly.
we're talking about a sizable stand in a good neighborhood, three-bedroom house, twin garage. It is quite the property. Looking at it now, you'd be lucky to pick that up for 2.5 million.
Exactly. And that speaks to that, and over that same period of time, we've seen gold go from $160 an ounce to where it's sitting at now over $3,500 an ounce. And that speaks to again, having wealth in gold, where an ounce, even at the beginning of this decade in 2020, an ounce of gold was a certain price to where it is now. And that price just over the last 5 years has grown considerably.
It has. I mean, I remember when we were still talking about gold being 1,000 something an ounce, and it wasn't that long ago. I think it was round about when I started working with you that it was still under 2,000 an ounce. And that is absolutely insane to think about, that so much has changed in such a short space of time. And that's why I'm saying one day we'll sit and we'll look, one day soon actually, we'll look back at $3,700 an ounce and go, wow, what a joke. We thought that was a lot.
Yeah, I always think about when I left school, and I'm giving my age away now, and that was 1994. I matriculated, and I remember starting to work straight out of school because I wasn't 100% sure what I wanted to do, and later on I then went and studied. But then gold was around $400. I think even below that, it was about $380 an ounce. And that was, wow, that's a lot of money. And as you said, I think, in the early 2020s, we were looking at about 1,600, there and thereabout, or even lower. I think it's about 1,000,
January
1,200.
January 2020 it was 1,550,
Yeah.
so $1,550.
Yeah. And see where it's grown there, just in this small period of time.
It's literally increased to three times that value in the space of 5 years. So it's crazy what's happening at the moment. As we said, it's uncertainty. It's uncertainty about political situations, geopolitical tensions. It's financial tensions across the world, and somewhere something's got to give.
And again, I know I wanted to keep this episode a little bit lighter than last week because last week was a very serious thing and a lot of concerns from my side on where the world is economically. Um, but it's the current world we're living in. There is definitely we're in a transitionary phase, geopolitically, with China now gaining to become the biggest economy. India's not far behind, and suddenly the US, all that will change over the next decade or so on how the world is viewed and who, they say he who rules creates the history. And again, that we will go into a new phase within this world. And again, that speaks to central banks. It speaks to a lot of people buying into gold because of its long-term stability.
And as Mike Maloney said, we're in for probably one of the biggest shifts of wealth in history.
Yeah. So just to finish off, and I mean, we got a thing on gold production for 2024, based on all the different regions. And what's interesting, and why I wanted to chat about it, and we'll actually share the link the viewer can actually have a look at the buy what do they call it, infographic, And they can actually have a good look and see what we're actually discussing here. But basically, this is the production of gold by region in 2024. And what's interesting is there was a total of 3,660 tons of gold that was produced globally. And of that, Africa accounted for over 1,000 tons of gold.
Yeah, Africa is by far the biggest producer as a continent. However, if we go according to country, then the biggest producer is, surprise, surprise, China.
Yeah, and that's followed by Russia, and then that would be followed by Australia.
Yeah, it's very interesting that we've got this three biggest countries sitting all sort of towards that end. Australia down there, China and Russia on that end, and it's very interesting to look at these statistics. We look at Asia, which produces 665 tons. I think they're in second place at the moment. Oh, no, sorry. They're in second place at the moment. So Asia is your second place producer. We've got Indonesia with a healthy 140 tons. And then, we move on to Russia, Uzbekistan, Kazakhstan, and together that group of countries produce 584 tons. Then we look at the Americas, and it's quite interesting that North America is the second lowest producer, or third lowest producer. Sorry, I didn't see Europe there in the corner. Europe is actually hiding away in the corner there. It's 36 tons. Not a lot.
Again, what this really speaks to, and I thought about this, is you look at Russia, you look at China, and you look at them continentally, and they vast, vast countries in actual size. You look at Africa, and I know on maps, Africa tends to be not as big as it is. In actual fact, Africa is by far the biggest continent on the planet. And what I've always said, and I thought it would happen in my lifetime, where we'd get a unification of Africa, we would have a cooperative way of actually accessing these assets. Again, I think based on the fact, I mean, you look here, Ghana is the biggest single producer at 141 tons. South Africa comes in third at 99 tons, and Mali at 100 tons. So what's interesting is if we as a continent had better cooperation, we'd be by far the strongest continent on the planet.
Yeah, and it's quite interesting that we're one of the biggest producer, or we are the biggest gold producing continent on the planet, and yet we probably the poorest as well.
And again, I think it does speak to the fact that Africa was colonized, and of course, I think based on certain policies was to keep the indigenous people dumb, or keep them away from education. And I know that's controversial, but we got to just see what the last 50, 60, 80 years have brought. That there's been no real rejuvenation of actually creating base where the continent can actually grow. And what I'm actually quite excited about right now, especially within the African continent, is Ghana, being the biggest producer, has created a new system called the Gold Board. And essentially, what it's doing is, it's because a lot of the countries, barring South Africa, which it's illegal to be an artisanal miner, you need licenses to be producing gold. Uh, all of the other countries, artisanal mining is the backbone of a lot of those gold sectors and industries. So what's interesting is Ghana found a way around that, where they tie in the artisanals, they create laws around it that they need to sign up and be part of the gold board. And what that effectively also does is it pushes out a lot of the countries that are coming into Africa, be it the Chinese, be it the West, through different mining houses and companies, where they exploit the assets and then leave very little to remain. They're not building the communities around there. But what's interesting with this new system, and I do see it actually taking a nice route in a number of other countries, where the artisanal miners are left to their own devices. They are to the will of the buyer, and the buyer comes in and says, "I'll give you spot less 30, take it or leave it," and flashes dollars to a very poor person, they'll say, "Absolutely, I'll take it."
It is something that I think we've seen time and again through history, um, talking about the fact that artisanal mining in South Africa is illegal. You know, governments are so quick to sort of ban something outright instead of enforcing it, regulating it, and actually putting rules in place of how a sector or a sector within the economy is supposed to work. As you're saying, Ghana has now set up this whole thing. So the people who mine the gold get a fair price, the government gets their cut, and the buyer gets gold that is actually, you know, pure, if I can call it that. We're
Well,
talking.
it's consistent, and I think that's what you're saying. So there's a system that it firstly brings in the artisanal. Suddenly, they are now part of a thing. Government can collect revenue from them, which is important from a government perspective. Where up until now, a lot of the artisanals fell below the radar of government and taxation and revenue collection. Now, suddenly, they are able to capture that revenue, and in turn, and this is the other part, is government needs to then come to the party by reinvesting into those different areas and those regions to start upskilling them, putting down the schools. That's part of the problem, is it doesn't necessarily translate across, and that's part of the problem that we're having to deal with.
I think it's part of the problem that we have to deal with in general across the world if we're looking at how things are standing right now. But yeah, I think definitely there needs to be a formalization. And if we can get that across the continent, so that these miners, I mean, they work in dangerous conditions, they risk their lives to get these things. And a lot of time, as you said rightly, they get absolutely ripped off.
Yeah, and I'm a big advocate of this. And again, we're looking at a number of African countries that we are talking to assist them on actually developing these structures. So it's an exciting time. It's an exciting time. I think this definitely, with gold being so critical to the global demand, and Africa being hands down a third of the literally the delivery of gold globally, it makes sense that we need to start formalizing these sectors, that they can start to become more sustainable over the long term.
Yeah, I mean, it's very interesting, Africa producing 1,010 tons, while North America, which now we're talking Canada, US, and Mexico, only produces 500. It's also a massive, massive landmass up there, yet they're producing half the gold that we are. And I think that just shows you how rich Africa really should be.
Yeah, and I'm excited. I think we're in a very exciting period from that perspective. And I think with the correct buy-in from governments and from government business sector to put these systems together in a way that is going to best benefit all parties, I'm a big supporter of it. Absolutely.
I mean, you cannot not support that, let's be honest.
And then Willem, just on closing, any final thoughts?
Yeah, I think it's absolutely fascinating to see what's happening in the world of bullion at the moment. As I said, I don't know how soon, but soon we're going to sit here and we're going to talk about how gold has crossed 3,700. I mean, is it going to be a month? Is it going to be a week? Is it going to be at the end of the year? I think it'll still going to happen this year.
Well, I think we're coming up to going into that final quarter of 2025, and we'll definitely do a show on just reviewing the year to date, and we'll have a look at what we had said projection wise, what other commentators have said projection wise, and we'll kind of give that for that last quarter of the year of the year. Where do we see prices going? And of course, running towards the end of the year, which is into the festive season and so on. You got October, which generally economically, if you look at a lot of market crashes and recessions and all that, have generally happened around October. So a lot can happen literally in that last quarter.
I think it's going to be an interesting one, definitely. And well, we're going to have to see what's going to happen there. It's there's room for a lot of stuff.
Yeah, we live in exciting times, and for me, it is sometimes concerning. With people with children, and of course, you want to make sure that the world we're leaving them is going to be better than the one they entered. And sometimes it doesn't feel that way, but I am an optimist, and I do believe if we get the right people into the right places, we can have those fundamental shifts.
I agree. Yeah, definitely.
Thanks for watching, and Willem.
If you liked the episode, hit the like button. And if you want to see more, be sure to subscribe. And we'll see you all in the next one.
Thanks. Bye bye.